So let's kickstart with Kelkar. The company's reported a good set of Q1 numbers. We're joined by the whole-time director, Group CEO Kedar Vaze, to discuss the performance of the company going forward. Thank you very much for joining in. It's been a good quarter. Your top-line growth has come in at 9%. Your margins have improved from 13.3 to 15.9%, and profits are higher by close to about 20%. If you could tell us what's the way forward, how is demand? Do you think you will be able to improve from here on, and what's the outlook on margins?
So I think we've gone through a rough patch in the last few years. We've taken the steps necessary to push the inflation, give the pricing commitments to the clients, and that has paid off in both growth as well as stabilization of the margins, both in domestic market as well as the export markets. And especially in Europe, which saw a very big inflation last year, we've been able to curtail and get the pricing implemented in the marketplace without any loss of business. So it's a very good quarter. We have managed to bring back, restore the business to the momentum that it should be. Going forward, we see all our businesses actions fruiting into growth. Each of the divisions, both the ingredient as well as the flavors and fragrance divisions, are looking at a solid growth in the next few quarters. Domestic business, we see growth as a challenge, but towards the second half of this year, we will catch up on the growth. The overall dampening of the inflation is a very good sign for the FMCG business.
Okay. I just wanted a clarification on that. You said domestic business will see a recovery only in the second half, but India has done well for you this quarter. It's up 12% versus Europe growth at 10%. Rest of the world is down 4.7%. So what do you mean when you say India business will see a recovery in the second half? And when you talk about export markets, will that be the growth trigger for you?
No, I think India, when you look at the 12%, it's also on the base of the damp quarter last year. So the first quarter last year was a little bit slow quarter. I think second quarter onwards, we have good quarters previous year. So base effect will go out of the equation. But I still think from the third quarter onwards, we will start kicking further growth as the rural demand will start coming back.
Looking at your segmental growth, fragrances growth is up 11%. Is that again on account of the low base? Is demand weak there, or has it improved? And your flavors business is still down 6.8% year on year. Could you explain that?
Yeah, so last year the flavor business for the first quarter was very strong account of seasonal demand of the summer products. This year the situation was that the first quarter calendar, fourth quarter was very strong for flavors. So the demand has moved from the first quarter to the last year, fourth quarter. So in flavors, you will see quarter on quarter more volatility, but eventually on a full year basis, the growth is very robust.
Okay, so when you talk about robust growth, you've given a margin target. You'll try to keep it above that 16% mark. But what about top line across segments, especially considering the weakness that you've been seeing in global ingredients segment? What are you guiding for when it comes to top line growth?
So we're looking at a 12% plus top line growth, which is our long-term guidance. In terms of Europe, we will see some growth challenges. So we will focus on profitability growth rather than just top line growth. But overall, I'm confident of delivering 12% for the year.
Revenue growth and EBITDA margins above 16%. This is the FY24 guidance. Can you give us a guidance or the way you're thinking about debt? Debt on your books is 530 crores?
Yeah, so I think the debt is a function of the inventories and large growth in the last two quarters. So a lot of working capital jump has happened in the last two quarters. We will sustain these kind of levels through the first half of the year, and then the debt will start to come down. Just be mindful that there is all the payments of the acquisition in Europe and the dividend payouts which we are expected in this quarter. So this quarter, we will still have the debt hovering around the 500 mark by the end of the quarter. And then the debt will start coming down towards the second half of the year.
Okay. And do you have any capex plans, or you're working at optimum utilization across most of the capacities?
We have already implementing capex in the Indonesian Southeast Asia region for a full factory as per our 3I strategy. So that is expected to go on stream sometime this year, second half. We will continue to invest in nutrition and flavor business as we move to cater to global MNC accounts and pharma and health nutrition pharma customers. So we need to make some investments for FDA approvals and things like this, which we will do in this course of this year.
Okay, all right.
But these are
Kedar,
small, expected to be $3-4 million.
Okay, all right. So we'll speak to you again when there is more clarity and there are more updates on the capex as well. Thank you so much for joining us today and detailing your numbers. So that's the word coming in from Kelkar. The stock has been buzzing ever since the numbers came out, and they were a good set of numbers. So that's working well. 11% higher.